Welcome out to another Trading Justice podcast right before Thanksgiving with my brother Matt. Lots to talk about in the market. Very excited to talk some AI with him. AI has been in the news like pretty much for the last two and a half years, right? And pretty much like it will be for the next two and a half years. And my brother, the holiday season at tackle trading is a special time for us. Not only do we get to spend time with family and some intimate time with our pro community, but we also have a series of events we do every holiday season that are really just genuinely special events. They are mega events, mega teaching events, things where my brother Matt spends an inordinate amount of time. And this Monday, we are discussing AI, the AI gold rush, something my brother's been all over since the inception. Very excited personally to see what he brings in this edition of discussion. It's been a few months, Matt, since you held an AI webinar. You got some special stuff stoked up for us?
Yeah, it's of course I do. And the number one thing I think most of our community is excited for is the latest edition of the AI Gold Rush watch list, which is the top 25 stocks based on my scoring system on the AI side of the equation. I break them into three tiers: tier one, tier two, tier three. Tier one are the leaders in the market. I think everybody and their dog can say exactly what those tier one components are. Where the real debate comes is in the tier two and the tier three candidates for the AI side of the equation. Nvidia has been the number one stock on the list for the better part of the last 2.5 years. The ultimate question coming into this week is do they get dethroned? Quite frankly, does Google want to step up and take over a little bit of that leadership? I'm gonna save that to the AI Gold Rush conversation on Monday. But if you do want to attend that AI Gold Rush and you want to get access to that watch list specifically, all you have to do is click the link in the description below. Go to the live events page at Tackle Trading. And there's a couple things you can do here at the live events page. Number one, you can register for any webinar you want to take over the next 5 weeks. We got the AI Gold Rush coming up next Monday. This has been a really, really good day trading environment recently. Not the best swing trading environment, I would say, but the swing trader demise recently from a price action perspective has been the benefit of the day trader because they've been creating a lot of pockets on those intraday levels. And if you want to learn how to trade from a day trading perspective, got an amazing webinar on December 8th, Day Trading Mastery. We have the monthly Master Trader Technical Analysis 2-day course starting on December 15th. We got the amazing Tackle 25 Cover Call class on December 22nd. We got a mentor coaching panel on the 29th, and we conclude our holiday season. And we like to think about it as the education season at Tackle Trading with the spread trading course on January 5th. So lots of webinars. And the beautiful thing is, once you register, you can also get access to the replays and you can watch those replays whenever you want after the event as well.
Yeah, and I don't want you to short skin that like watching the replay of Precision Webinar, which Matt did this past Monday, a couple days ago. I watched it, was there for every minute. It was just a fantastic educational event. If you want to become a great trader, this series of webinars, watching the one on recording from Monday,
Good start.
attending the upcoming ones, this is a great little gift that you can give yourself. Now,
Mhm.
Matt, as we dive into the market,
Yep.
Bulls have been in charge for the last four trading sessions and don't want to overcomplicate it as my cat is obviously very excited about that green candle. Don't want to overcomplicate it. Ever since Fed Chair Williams spoke on Friday, where
Mhm.
he alluded to a December rate cut, there's been a lot of debate as what has caused the volatility and the uneasiness in price action over the last month. You've ever since Williams spoke, and then you had others like Daly this week and
Mhm.
others basically reinforce that bullish message, that dovish message that a rate cut is coming in December. Markets have traded a lot different in the last four trading sessions than they have the last month, haven't they?
Yeah, especially on the last three. I mean, on Friday's recovery candle, that was based on Williams' conversation, and it was a very important candle, quite frankly, because we were going into some nasty technical side situations. And the simple reality is that recovery candle on Friday maintain the viability of the 20-period moving average on the weekly chart as that ultimate support level. That certainly played out this week. And, Mark, I think two things occurred here for the first time for the Bulls to get a little bit of momentum for the first time in a while, because it's been a day or two since they had proper momentum. In fact, I'd say this is the best 3 day stretch the Bulls have had in quite some time. And you might ask yourself, well, what's different today versus what it was last week? They're still having the debate on the AI conversation, the Michael Burry debate of the valuation, the bubble mechanics. Obviously, that's still being debated right now. Economically, you're dealing with some mixed data right now. But the simple reality is, we were coming out of an earnings season that I thought was extremely positive, quite frankly. I thought it was a very, very good earnings season, and the market has been choppy ever since then. Well, ever since then was the Fed coming out right here on the 30th and saying, well, the path of policy, which the path of policy means, is there a debate for the Fed next meeting? Is the market participants debating whether or not there's going to be a cut, whether or not they're going to pause, whatever the case might be. And there was no debate during earnings season on that. There was not even a real debate on that going into the Fed in late October. But Jay Powell decided to make that a debate. And from that point on, the market has been very shaky from a technical perspective, and it's been very difficult to project outside of individual moves from an intraday perspective. So what's different this week? The earnings was there last week, the week before, the week before. What's different is there's two data points that are important that is solidified the path of policy. And when the path of policy is solidified, the market's not going to entertain those other conversations on valuation, for example. The market is going to be more than willing to entertain a valuation debate when there's choppy price action based on the lack of understanding of what the Fed is going to do. Well, what we have seen over the last 3, 4 trading sessions to spark this bull rally and to get the bulls into a little bit of control coming into Thanksgiving, number one, you mentioned it. We had Williams came out last Friday. You had more Fed speakers this week suggest that as well. But Mark, what also happened is we got the first economic data point on inflation this week. Because of the government shutdown, we really haven't had a tremendous amount of economic data. And that first economic data was the PPI report. And even though the PPI report came in line at 0.3% versus 0.3, when you're looking at the actual core number, which basically excludes food and energy, that came in underneath expectation. And that was one of the obviously one of the big questions for the Fed is, as they're debating inflation versus labor, and they hadn't seen a lot of this data. Well, the pipeline side says, we're coming in a little bit of a miss here, and probably gave the Fed enough ammunition to come off their "are we or are we not" language. And now you're seeing most of the Fed members kind of support that rate cut. And when you look at kind of the probability of that rate cut, when you're looking at it from an overall, CME group, let me go
Rate cut
kind of go
odds
to the
are
Fed
swinging
fund
like
rate.
a quantum computing stock lately.
Uh, yes, they have been fairly volatile, but when you're looking at the probability right now, it's at 85%. Last week, at this exact same time period, it was a 50-50 coin flip scenario. In fact, 10 days ago, it was not a very likely situation. Now there's an 85% probability of a rate cut coming into December, which means nobody's really debating that right now. Now, me on this podcast, in our lounge, in our tackle trading content, we haven't really debated the rate cut. I've been very clear that I felt like the Fed was going to give a rate cut in December. I didn't feel like the market was understanding what the Fed was really saying, especially Jay Powell. But now the market seemingly gets on that stage and they're like, okay, now it does look like we're getting a rate cut. And that, number one, gets priced in. That creates short covering too, to create a little bit of momentum. And now the Bulls have a little bit better technical edge going into the holiday season. And so when you're looking at the overall technical landscape, we're not out of the woods yet, but the Bulls have won battle after battle after battle this week. And if we close here on the S&P 500, meaning this week, you're talking about confirmation on the ES. You would also be talking about confirmation most likely on the NQ. You would also be talking about confirmation on the Russell 2000 as well. And so bulls, they're doing good work here this week. Can they finish the job? One level that is very important in the market, just keep an eye on, because if you break this, it's a little bit of open air, and that's right where the market in the Nasdaq's looking at, right around the 25,400 level. And so good bull move here. Can they finish the job? That's the open question. But as of right now, it's good to see the bulls fight back up. But the job's not done. It's just they've been winning little battle after little battle. Can they complete the picture?
And we have very little in the way of catalyst standing in the way of us and the next couple of weeks. Fed meets on December 10th, which means next week they will go into their blackout period, which means we'll end, unless you get some surprise Fed speak, you're going to end this little stretch with some positive vibes on the cut coming out of the Fed. That means that you're not going to have any Fed speak between then. You're not going to also have any major economic data, Matt, because all of that economic data has been pushed out to the week after. That's when we'll get the next unemployment report. That's when we'll get the next CPI report. We don't have any major earnings. And so, Matt, we're heading into Thanksgiving. We're going to have a little shortened day on Friday. Bulls have momentum. And you don't really have, granted, standard disclaimer, anything can pop up geopolitically or out of Trump's Truth Social
It does
account.
seem like the president is trying to alleviate some of
But
that, though.
he doesn't feel like he wants to stir the pot.
I don't think he wants to stir the market pot either.
No, and so you're having this fairly long stretch of 8.5 trading sessions. Bulls have momentum, not a lot of catalysts in the way. Feels like it's theirs to lose at this point, doesn't it?
It does feel like it's theirs to lose. They do have the technical edge on the intraday side of the equation. That is equating to a much better daily pricing condition, which is leading to ultimate confirmation on the weekly chart. And this is how volatility gets wiped out. It starts on the intraday time frames, and then it leads into a better daily picture that ultimately leads into the weekly confirmation. And in all of that, bears usually get a little bit spooked. And so, like, you could see some very interesting patterns develop here. And everything that you said led me to one conclusion. This is becoming a technical story more than it is a macro story. And as everybody can kind of witness over the last 3 weeks, I don't think traders outside of the intraday time frame, so maybe on the cash flow side of the equation, love when the market's debating macro stuff. I find those conversations fascinating personally. I think a lot of people find macro conversations fascinating. But when the market is debating macro, it usually creates a little bit of sensitivity on the price. When the market gets conclusions on the macro, it usually creates a little bit more consistency. And we're starting to see the early signs of that consistency. 3 days in a row, bulls have kind of held the charge, finished towards the top end of the day. You're seeing indicators flip the script, and again, looking very close to a cross for the first time on MACD, and ever since this saga really began.
Ever since the Jay Powell
Ever
started
since Jay Powell created the first cross in the first place, you're now starting to see the first cross here. And so a lot of traders like, oh man, 4 days up, can't chase that. I agree. Maybe you don't want to chase that, but you certainly want to be looking at secondary patterns here, especially as the momentum is shifting here. And again, the momentum shifting because the Fed is not becoming a major part of the story. Is the Fed was a major part of the story recently? That's coming out. Let's see what happens from a technical perspective. But as a technician, I like the development here from a bullish perspective, because it could have got a lot uglier without Williams' commentary last Friday to save that support level.
Yeah, no, absolutely. I want to pop in on gold and crypto real quick, and then I got some questions on you on AI.
Mhm.
One of the things, during this little stretch, we saw some little bit of volatility in different assets as markets got volatile. Gold really, while it got caught up with a candle here or an intraday move there, really didn't want anything to do with it. You're now starting to see some healthy price movement the last couple sessions. Matt, the macro case for gold is pretty strong. The fundamental case is pretty strong. Technicals look like we've gone through a period of digestion, right? Which is very healthy, very healthy. What's your take on gold as we head into the Thanksgiving holiday?
There's some levels to keep an eye on. Ultimately, 4,400. But the thing I'm very impressed with gold in the recent volatility, despite the dollar doing what the dollar has been doing, and we are seeing some double top action on the dollar, which is positive for the market and positive for gold as well. So that's something to keep an eye on. Gold never once violated a support level, like an actual pivot point of support. It violated hypothetical catalyst of support, but catalysts are not support. Support is defined by the market itself. And we never broke a major support level in this pullback. Now, one of the reasons is because the upper movement price was so spectacular that a little bit of a choppy pullback, you had a lot of room to run with. But what we never did was break that 9 EMA on the weekly chart. What we never did was break any daily pivot point to create additional volatility. That shows me control. That shows me that we weren't really seeing anybody aggressively sell. We weren't seeing institutions sell. We weren't seeing the government sell. We weren't seeing the gold bug sell. I remember I asked this question to our team on Monday this week. I said, "All right, guys, regardless of the situation, did you sell your long-term holdings? Are you going to sell your long-term holdings?" And not one person, there was 40 people in the traders lounge that day, and not one person said, "Yeah, I sold my long-term holdings." Because I think to the investor side of the equation, not the traders, the investors don't care. The investors like, "What are you talking about? New York State is putting out inflation reduction checks. Are you kidding me?" I have a lot of confidence on the cold side of the equation. So technically, I'm very impressed with the 9 EMA on the weekly chart. There is some overhead to navigate here from a trader's perspective, but from an investor, like there's not a flaw here, in my opinion.
Yeah, and Bitcoin, which has been the center. I mean, just you want to talk about terrible price action, very symbolic of a lot of the pain that's been in different areas of the market. Because there's been some, especially in a lot of different stocks, Matt. Like I saw some stat on Thursday when we were hitting the low, like more stocks in the S&P 500 were in a bear market as defined by a 20% move down
Mhm.
than not. Right. So there was a lot of individual pain. I think
Which means, regardless of the 4-day move in the S&P 500, you really haven't missed anything from a developing perspective yet.
there's going to be a lot,
There's a
if this
lot
move
of
is
potential
rule, and if you're
reversals. Yep.
and that's what I wanted to highlight here with Bitcoin is that sometimes it can feel like, oh, the S&P is doing this. I'm like, yeah, and I got about 400 to 600 ticker names that could develop really nice bottoming patterns after prolonged sell-offs in the coming
Mhm.
trading sessions. So this is one of these environments where there is a lot to pay attention to, right? There is a lot to pay attention to and a lot of potential opportunities. And it's about pattern development now, right? It's pattern development on things in strength. It's pattern development on things that have got butchered like Bitcoin. But Matt, this is what the start of a bottom kind of would look like, isn't it?
It's what the start of every bottom in the history of mankind, in the history of every pattern starts with. It starts with a pivot, yeah. But uh, that's step one in a long-term story here. Um, what you haven't seen is shifts in momentum here. You've seen shifts in momentum on the ES. You've seen shifts in momentum on technology. You've seen shifts in momentum across the board on the equity side of the equation. Bitcoin, if I look at the exact same scenario, all we have is bearish, the bearish side of the equation, seeing a little bit of loss of momentum. Bears losing momentum is not an indication that bulls have the momentum. And in a market that has 4 straight days up coming into bear stop out analysis, Bitcoin can't touch the 9 yet? Like, I think you got to ask that question. Why is it significantly underperforming the bull side of the equation? It outperformed the downside. It underperformed on the 4-day recovery. That to me is not a sign of a reversal yet, to be perfectly blunt. That to me is a sign that there is a bearish pattern developing. Bears have the momentum in trend. You see the market here go from 117 down to 100,000 here. That's a $17,000 price movement. Then it goes from 108 down to 85. That's a $23,000 price movement. Momentum is extending in trend. It's not contracting. And so there's two things you really want to see here. You want to see the momentum shift. And bears losing a little bit of momentum is not a momentum shift. It's simply bears losing momentum because the bears aren't pressing the edge anymore because they've been pressing the edge for 10 straight days. And so it feels like the bears are just taking the day off here more than anything. Whereas when you're looking at the ES here, boom, 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 boom. Won a battle at the 9 EMA, won a battle at the 50 SMA, won a battle at the 20 SMA, all the way back up into the trend line. When you look at it from an intraday perspective, broke resistance, went to the next level, broke resistance, went to the next level, broke resistance, went to the next level, broke resistance, went to the next level. That's control in price action. That's the bulls showing you they have control of the intraday side of the equation. That momentum has already shifted to the bull side of the equation. And when you come over to the daily chart, that's why we have the hook and that's why we have this potential cross here. Whereas when you are looking at Bitcoin, you just don't have that argument. You have increasing momentum to the downside. You have a slowing momentum pattern at the low point. That's just bear on bear stuff. That's bears pushing it down, and that's bears coming out of the equation. Bulls haven't shown up yet here. And so the first thing you want to look at is for that momentum to shift. And for that momentum to shift, you got to win a technical battle at resistance. Holding support in an overextended condition, I'm not waking up for that day. You break a resistance level, you hold that bid, you start to see some bullish action. Yeah, at that point you can entertain. But even at that, that's step one. Step two would be the double bottom here or the high base that happens at some degree of bear stop out level. Right now, that bear stop out level would be 100K here. So you got a lot of work to do in pattern development, in my estimation. And I don't have that fundamental purview of Bitcoin the same way I do gold, where if and I know it's not fair, but if this was a gold chart, I'd be like, yeah, start that investment thesis, dollar cost average. But I have a different philosophy on gold than I do Bitcoin. Bitcoin, you got to prove it out, and you got to prove it out in a reversal.
Yeah, no, and whether it's Bitcoin or many of the others, Microsoft, right? I mean, there's some big names, very popular names that have gotten beat up a little bit,
I
right?
think you could say a very similar argument of Microsoft. I think you could say
Yeah.
a fairly similar argument of Meta. Both Microsoft and Meta have sold off significantly. Meta's obviously underneath the 200-day moving average, coming into that $600 level. Microsoft at the 200-day moving average. Again, it's at a level that you're interested in, but you got to see that prove out with a reversal there, or you're just going to fight every billion different resistance levels. And so it's good to see the bulls start to show support. It's good to see the bulls step up in the equity space. I don't think they're stepping up in the crypto space yet.
I have a couple questions on you on AI, Matt. I
Mhm.
think price action lately has really put to rest what the source of this volatility was. It was Fed induced. I think price action is telling you exactly what that is. But Matt, along the way, there was a lot of AI debates, and isn't it funny how you get a little downward pressure, and then all of a sudden, a lot of people will start trying to guess what is causing it, and a lot of people attribute price action to valuation, something they never, it's funny, nobody will be doing that today. Nobody will be doing
Even
that
though
today.
valuation is worse today than it was 4 days
Even
ago.
though it is worse today than it was 5 sessions ago,
Yeah.
nobody will do it today, right? To attribute causality.
It's
But man,
amazing how that happens. Nobody complains about valuation when the stocks are going up.
we have a much like, in the midst of it is such an exciting time in the AI development period, right? I'm not even talking about the markets, right?
Mhm.
Just what is being accomplished. It feels like we are in one of those once in a lifetime. And I know people
We
in the
are.
with it, but this feels different than the creation of the internet, right? This feels uh, something very, very special that we're witnessing, in real time
Well,
to
I certainly
develop.
think there's a lot of similarities, but there's some obvious differences as well. I'm not sure there was a lot of concern that the internet was going to take everybody's job.
Okay, and that is one of my questions. I got 5 questions for you.
Yeah.
I got 5 questions for you around AI, and it's funny in talking to you about this. I was like, I could ask 50 questions. You said narrow it down to 5. We have a podcast ahead of Thanksgiving. We got to get this out, right? We got to get this out.
Well, and let's save some of the conversation for the AI Gold Rush webinar as well. So
You
yeah,
know,
I didn't think 50 questions was going to be answered in 50 hours. So
yeah, no, and I want to start with this, where we're at in the AI boom. We've had a lot of individuals such as Michael Burry make some headlines recently talking about bubbles, talking about valuations. He has not been alone over the last couple of weeks. You have seen everybody that had a doubt about this or that come out. Price action has kind of given them cover on that, to justify those doubts. Where are we in the AI cycle, right? Early stages, and address these bubble,
well, what
arguments,
specifically, what do you mean on that? Because where we at in the cycle, we're in the infrastructure build out phase.
because, well, you've done a
Like,
good
what does
job
that
over the
mean? Like,
what over the years. You have basically done a good job in this podcast, in our pro community, in AI special events, basically telling us where we're at in the stage, and then
mhm.
kind of painting where the next stages were. And so I kind of just wanted to get your take
We're
on where
well
we're at.
past the environment where you can just simply say I'm an AI stock and get a bid. The AI startup hype that has obviously been deflated. Like you can't just come out and say ooh AI and get that bid by the market. That's well past. So whatever AI startup hype that you think might be there, that was there 2 years ago. That was there 18 months ago. That was there a little bit 12 months ago. That's completely gone from the picture. Where are we at? 3 months ago, we were at a stage where anytime the hyperscalers were increasing spend, the market would go up. When they decrease spend, the market would go down. We're kind of past that stage as well. And so I do think we're past the hype stage where you can't just say something like Oracle's we're putting out 300 billion credits and call it revenue.
We're
Like
past the
you
OpenAI making an announcement and the
can't
market.
simply make an
Yeah.
announcement. The market is in the mode of you got to show us something real, guys. You got to show us something real. However, I will say that's where kind of the epicenter of the Michael Burry conversation kind of starts because that's his argument is they're spending billions and billions, hundreds of billions of dollars, $350 billion this year alone on the hyperscaler build out. And he's like, well, you're putting all this money into the infrastructure. When are you going to start to show a positive revenue on that? And it's like, well, we're kind of thinking about two different things here. One, you're talking about the valuation side of it. The other one, you're talking about the infrastructure side of it. Mark, when you build a plane and you design the plane for the first time, you're going to have that plane cost billions of dollars, far more than what it's going to cost you when you're building your 100th plane. That's where we're at right now. The spend is so big because the energy grid you need to power AI long term is massive. It's absolutely massive. And so, where we're at in the AI boom, are we expanding or are we at the early stage of a bubble? Would you say is that kind of the ultimate question that people have?
Yeah, I think that's the ultimate question. I
Okay.
mean, it
So,
is one of the favorite points of discussion, debate amongst banks, traders. Is this a bubble, or are we in
well,
the other stages? And people have differing opinions on that,
I
obviously.
agree, but can't both things be true? Can't there be bubbled areas of the AI trade and yet the build out on infrastructure is vitally important? We are
That's
in
a good take.
we are in a massive expansion part of the infrastructure build out that is going to dominate the AI space for decades to come. And so I do think Michael Burry and people like Michael Burry are missing that ultimate point that yes, there's a lot of CapEx spend right now. Yes, there's a lot of R&D spend right now. Yes, that's into hundreds of billions of dollars. Even Mark, and it's not just the Max 7 components. It's not just the big time hyperscalers. 50 billion in infrastructure spend was done in non-tech companies this year. It's 350 billion out of the tech space, but it's another 50 billion out of just non-tech companies who are putting in infrastructure of their own right. That infrastructure and that investment of infrastructure and the energy it needs to power AI will pay dividends downstream. And so I don't think it's proper expectations when you're going through a massive build out on the infrastructure side to say, oh, this is a bubble in energy. Are we really going to make that argument that we're seeing a bubble in the energy build out that is needed? I think that is an absolutely foolish argument. Number one, we need more energy. Number two, even before AI, we should have invested in our energy grid. And yes, is AI forcing some of that conversation on the United States government, the sovereign government of the United States, investing in their energy grid? Yes, because China's doing it. And so, yes, there's hundreds of billions of dollars being spent on the infrastructure build out to bring in the energy infrastructure to power AI in general. And so I would say there are certain aspects of the AI trade that you could argue is in a little bit of a high valuation, not a little bit, but a fairly high valuation. There are some aspects of the recent price action that do maybe the market's getting out in front of its skis. But to suggest that the AI trade is a bubble discounts what is actually happening on the AI infrastructure build out. And so no, I don't agree with Michael Burry that the AI trade is a bubble. I certainly agree that there are some valuation concerns in the AI trade as the market got out in front of itself a little bit. You're talking about massive market appreciation over the last couple of years. I think it's foolish to think that that type of momentum is going to continue to expand in that same capacity. But I refuse to see the infrastructure side of this conversation as a bubble. I mean, we are seeing not just corporations, Mark, we're seeing sovereign governments spending trillions of dollars out there on infrastructure energy build out because there's two races going on right now. The race to AGI is what Michael Burry is kind of talking about, and it's creating bubbled mechanics, and it's putting all these hyperscalers spending XYZ amount of money, and how much can they do that before they have to show a profit? Totally get all that conversation. But the true AI winner is going to be based on energy. Whoever
Yeah,
perfects their energy build out
yeah.
is going to dominate not just the AI trade, they're going to dominate geopolitics for the
Yeah,
next
save your.
years.
I
And
got
so you
questions that relate to
cannot
that.
tell me that if a country wins the energy debate here, wins the AI debate, and they have the ability to dominate geopolitics for the next 100 years, that investment today is not going to prove itself out exponentially down the road. And so, yeah, I think Burry's making a good point on the valuation component right now, but I do think he's missing he is missing the end result here, in my opinion.
All
This
right,
is not
next
the
question.
subprime meltdown. This is not the dot-com meltdown. This is a massive, once in a generation infrastructure build out that is changing the landscape of how we see life in general. It's not a small conversation.
Listen, and we some follow up questions that are going to relate to some of this. You want to attend the AI Gold Rush webinar this Monday. Like, if that analysis is as good as you are going to hear out of any financial institution, 10 AI Gold Rush on Monday. The link will be in the description below. Matt, what if anything can knock NVIDIA? This is my second question. What of anything can knock NVIDIA off the king, queen, and country of AI?
That's the first position on the AI gold rush is the king of AI, and that has been NVIDIA for the last couple of years. You know, um, I the concern here on NVIDIA is are they giving up their GPU domination that dominates the frontier model training? Are they going to give that domination up? And they literally have a monopoly on that for the last couple of years. If you wanted to spend on any hyperscaler build out, that money went to NVIDIA. Well, recently, over the course of just the last few weeks, we've seen China make certain announcements that they're trying to get a much better production on their GPU side of the equation. They are not where we're at, and I don't think they're going to catch up to us on the GPU
Well, you
production.
just answered question four.
But they are making inroads on that. You know who else is making inroads? Google, Amazon, Microsoft. The hyperscalers themselves are training their own chip models. Google with TPUs, Amazon with Trainium, Microsoft with Athena. You're seeing the hyperscalers start to put production into their own GPU, and that was all based on individual components that were the hyperscalers going to start spending on NVIDIA. But with the Google TPUs that we just saw released recently, you're seeing other hyperscalers start to go to Google instead of NVIDIA to help with their build out. Now, does this dethrone NVIDIA from that ultimate king, queen, and country position on the number one position on the AI Gold Rush watch list? We'll have to wait and see till that on Monday. I'm not going to answer that here on in the podcast because I haven't done the final review yet. I kind of have the list kind of where I want it to be, but I don't have the final review right now. I will say as of right this very second, Nvidia is still in the one position. And again, I don't think the risk to Nvidia is necessarily Google or Microsoft or Amazon or like that increases competition. I don't see increasing competition as necessarily a net negative. Nvidia is going to put their foot on the gas pedal here, no doubt about that, stay in front. But I do think one of the risks that Nvidia might have is if these hyperscalers just say, you know what, we're done with Nvidia, we're going to do all vertical integration by ourselves. I don't see that as of right this very second. Can Google take market share? Yes, that is an absolute yes. There's a reason Warren Buffett bought Google and not Nvidia. There's a reason Kathy Wood bought 17,000 shares of Google just yesterday. Just yesterday. And it wasn't because Google's not doing great things on the AI. There's a philosophy that Google's going to take market share from Nvidia. But Mark, does that mean that the AI trade doesn't have enough room in it to fit a Google with their TPUs and an Nvidia with their GPUs and AMD? I certainly see it taking market share. I certainly see it having the ability to not go up as much as it has, as fast as it has. But I'm not ready to dethrone Nvidia, to be perfectly blunt.
All right. My next question, Matt. This is such good stuff. This is like excellent reference material for me in helping people understand that. The next question, and there's a lot of ways I could phrase this, but it has
Mhm,
to do with labor.
mhm.
You have talked about the labor aspects and how it will impact society and the market. Before anyone else that I heard recently, Elon Musk addressed this and discussed
Elon's a
how
little more radical than I am,
yeah,
to
the
be
AI is
honest.
going to take all the
All
jobs
jobs in the next 5 to 10 years. I
in
certainly
10
think that's
years.
let's just say that's an ambitious timeline.
But like, even Jay Powell 3 or 4 months ago was basically saying that he didn't think that AI, it was unknown. We don't know if it's going to take any job. I don't think anyone's being that stupid or that dismissive these days. We've seen it impact. Where do you see this story go from here? What's the rate of decline? Is it a fast decline? Where are you between Jay Powell 4 months ago and Elon Musk saying all the jobs are going to be taken?
I'm closer to Elon than I am Jay Powell. I'll tell you that right now. Jay Powell was oblivious to this entire conversation up until a few months ago. Um, I personally believe AI is already having an impact on the labor market. I personally believe that one of the reasons that we are seeing lack of hiring in America today is because hiring of new people is getting replaced by just simple productivity increases of your existing employment base. Every employee today is more productive than they were a year ago. That's the simple truth. And as AI build out goes further and further and further, every employee will be able to do more and more and more, which means you won't need as many employees. And so I don't think we're seeing outside of the tech space, we are seeing layoffs that are AI induced in the tech space. But outside of the tech space, I don't think we're seeing any layoffs that have been induced, mass layoffs based on where we're at in the AI space. I don't see that. The impact that I feel we're seeing in the labor market this year is the lack of hiring based on increasing productivity of the existing employment base, existing labor base. We are more productive this year than we were last year, despite less people working this year than they worked last year. And so we will see that every single year from here until the end of humanity, quite frankly. And so the ultimate question is, where is AI having the impact today, and where does AI have the impact on other areas of the market downstream? The areas it's having an impact are hiring decisions right now. New employees, companies are looking at their existing base and saying, you take on more work, you take on more work, because we know all of you guys use some degree of chat GPT to help you do your work. That's on the service side of the economy, not on the production side of the economy, obviously, which means where's AI having the biggest impact is not on high school people that have a diploma that work a blue collar job. That's not where AI is having an impact. AI is having an impact on college educated individuals right now, because that's where a lot of the service jobs are. And so service jobs get impacted first. And then as AI builds out downstream through automation and robotics, I'm looking at you at Tesla, I'm looking at you, Elon. At that point, then manufacturing and automation starts coming for those jobs. And so there are certainly going to be every industry in America get impacted over time. What is the net result on that? I think it's extremely difficult to say. I do not believe ultimately that nobody's going to have a job like Elon believes. I don't believe it's going to be one of those situations where you work just because you choose to work, not because you have to. Elon also believes that we're not going to have a currency system based on this, and you'll be able to go to the grocery store and buy a loaf of bread for a penny, for example, because of the production will all be done through robotics. That brings net costs down. And so, yeah, it's an interesting world to think about, but we're decades and decades away from that, and it's certainly not in the next 5 to 10 years. I think it's going to have about a 40% impact, disruptive impact over the next 2 to 3 years in the labor market. I think it's going to have about a 60% disruptive impact by 2030, and probably by 2040, automation and robotics will be dominant in every field in America. And so, whether it's 5 years, whether it's 10 years, whether it's 15 years, yes, I do believe AI is coming for your current job. The one thing that I'm always interested in is, what does AI create? What type of
Yeah, no, it's always
jobs does AI create? Because we're certainly seeing a little bit of that, but Mark, there's going to be a tremendous amount of new things that get created along the way as
well,
well,
if there aren't, Matt, it would be the first time in the history of technological revolution in
which
which
I
that
don't
did
believe
not
that's going
occur.
to, yeah, I don't believe that's going to occur here. So I certainly see disruption. We're already seeing it. I think it's insane to not think that AI is going to be, that AI is not going to be disruptive on the labor field. To what extent? Um, I think it's an open question, but I would be closer to Elon than J Powell.
Okay, next question. And this is a very interesting one. I've spent a lot of time recently personally thinking about this, which I knew I was going to ask you about it. How big a constraint is energy going to be on the AI boom, right? We have this move in technology, we have, innovation, we have progress, but there's a lot of just math behind, the energy that is
Mhm.
needed. Are we going to hit a point where we don't have enough energy to take it as fast and as far as possible?
We're already at that point.
So,
Like,
okay.
we are literally at that point right now. We do not have enough energy in America today to power the AI build out. That's why the hyperscalers are building out. so many data centers out there in the marketplace. And so, will we have enough power to, yes, over time we will. I mean, Bezos was talking just the other day about putting data centers in outer space within the next 10 years. So there are certain constraints on the AI build out right now from an energy perspective. But Mark, the race to AGI is what people talk about, the race to AI and winning the race to AI. It's not just the race to AGI, because if you achieve AGI but you don't have the energy to power it, that's a different equation. And so, obviously the race is between us and China on both sides of the equation there. And the limitations are, it's not going to be on the technological build out. It's going to be on the energy, having the ability to power it. And right now, we're already behind the eight ball there. There's land availability concerns, there's local grid capacity concerns, there's cooling and heating concerns, there's environmental and permitting concerns. And those are all things that typically China doesn't have to worry about, quite
Well, and
frankly.
that's my fifth question. I'm going to
It-
bring that in right
yeah,
now. Does China have a realistic path? Because, you're my AI guy.
yeah, of
But
course
from
they
my
do.
analysis, it comes down to if they do have a path to win, and this is question five, it would come down to energy, wouldn't it? Their energy advantage.
Yeah, there's one big advantage that China has over us, and it's their sovereign AI plan. They work as one from a country perspective. And China is putting in a lot of money into their own infrastructure build out, whereas the government in the United States is relying on private corporations to kind of finance and do all of the infrastructure build out, which means a sovereign government obviously has the better ability to go out there and do that in a quicker way. And so I would say the energy side might be their leg up here. I think America wins it ultimately, but I think you could generally argue that they have a little bit of a leg up because of their sovereign plan and that comes right from the government funding. But in my estimation, the two races are the race to AGI and the race to power the AI trade in general, which is the infrastructure build out. And whoever wins the energy one is probably going to win ultimately the sovereign domination over the next century, quite frankly, because Mark, whoever gets AGI first, they're not going to be the last. You're gonna have to power that. You're gonna have to power that. So even if China gets it first, you don't think that we're gonna figure that out pretty quickly after that? And same goes on the other side. Let's say we figure out AGI first. Let's say Elon pops that bubble first and gets it. Well, China's gonna be right behind on that AGI conversation. The ultimate question 5 years from now, 10 years from now, is it will be obviously further in the advancement of that discussion, but the ultimate question is, will you be able to power it? And right now, I think China has a leg up, but I don't think they win the race. So, do they have a legitimate path of winning? Of course they do. Of course they do. And in my estimation, it's extremely important that we win the race to AGI, that we win the AI battle, that we ultimately dominate the on the energy side of the equation. And obviously, there's things we got to build and we got to work on. But right now, I do believe the U.S. is winning that race, and I think we got to put our foot to the pedal. President Trump recently came out and talked about the importance of having, one voice from an AI development side of the equation, because we don't have a national sovereign strategy on AI. We have private corporations playing in their playpen right now. We don't have regulations. We don't have a national strategy. I do think it's important to have a national strategy. I know certain politicians, and from a political perspective, they might have some state rights conversations and debates, and I'm a states' rights guy, so I totally understand that. But that is China's advantage, is they have a sovereign strategy that they're executing. We have individual corporation strategies that we're executing. I do think it's important to have a national strategy here.
Man, this has been literally what you want in a podcast. Like, as far as
Let's call it a
informative,
podcast then.
well, I got one quick game.
Gotta
It's a
be
quick
quick.
one, right? Match the 7 Mag 7 and Oracle to the 8 Thanksgiving dishes. I'm going to throw out a Thanksgiving dish. and you tell me what the Mag 7 company is
Mm.
for that dish, and we'll call a podcast, go start
Yeah.
our dish. Are you ready?
Yeah, I'm trying to catch up with you are as fast as Usain Bolt when it comes to transitions from a segment to the segment. So I was still on the AI. I got to get into the turkey phase. Yes, we got 3 minutes. Let's do this.
Who is the turkey?
So you threw in
Yes,
Oracle there.
I threw
Um,
in Oracle for fun because, or you could throw in Open AI.
who's the turkey?
Let's throw in Open AI instead of Oracle,
Okay.
even though they're
Who's the turkey in NVIDIA?
Nvidia is the
They're the
turkey.
main dish.
So they are the main dish, and you're a big turkey fan, aren't you?
No, they're just the main dish. I'm a mashed potatoes guy.
Oh, well, who's the mashed potatoes?
Google.
Who's the gravy?
Mm.
You like gravy.
I'm gonna say the gravy is Microsoft.
Who's the stuffing?
I do like me some stuffing.
I know. I'm
I
giving
I
you your
I, I,
favorites
I do
first.
like me some stuffing. I'll
I
go
might as well
Tesla.
be asking Matt
Tesla.
to rank Mag 7.
Tesla's the stuffing.
Tesla? Who's the cranberry sauce?
OpenAI.
You don't like cranberry
It's
sauce?
disgusting. I don't understand it. Why are we mixing some stuff like sweet and sour, like savory? Like what are we doing here? Like OpenAI, you've mixed it
I
up in
didn't know if Matt
everything. You
liked
just threw
cranberry
a
sauce.
goulash. Like OpenAI thinks they can go do a deal and do fake money deals with absolutely everybody. That's like dumping a cranberry jar on your plate. It's just messing everything up. It colors up the joint. Like no, 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 no. Plus, it's not even good. Like I know I'm the crazy one here, but no. Cranberry, yeah, I'm gonna go with OpenAI.
Who is the green bean casserole?
Oh, green bean casserole. Let's go with Amazon.
Let us. Who's the yams or sweet potatoes?
Sweet potatoes, let's go with Meta. And the reason I say that is sweet potatoes are a hit or a miss for me.
Uh
Like
huh.
sometimes they hit, sometimes they miss. And Meta's kind of after the recent earnings report, a little bit of a hit and miss type situation. So we'll have to wait and see on the development of that sweet potato dish, the same way we're going to have to see the development of that reversal on Meta.
And that would make Apple the pumpkin pie, which seems
Um, okay, I'll go with that.
all right, Matt. Listen,
I'll
Monday
go with that.
AI webinar. This has been fantastic. Be sure to watch it on Monday. Matt, send us out.
Yeah, AI Gold Rush webinar. Come check it out. Check it out, the AI webinar. But really, we're going to be talking about the tiered watch list known as the Gold Rush watch list. That comes on Monday at 8:30 p.m. Eastern Standard Time. We got done with our first one. It was precision trading. It was such a great event. I know I was the speaker. I know I have a bias on that, but I just had a tremendous amount of fun. I thought the team was absolutely just amazing on Monday. Let's rinse and repeat that all education season long with the AI Gold Rush webinar on Monday. You can hit the link. Come join me on Monday. It's free. You can also get access to that watch list as well. And with that said, I hope everybody has a wonderful, wonderful rest of their week. Happy Thanksgiving to absolutely everybody. And I just want to say to all the Trading Justice listeners, whether you listen on YouTube or you listen on any of the podcasting apps out there, I just want to say thank you for being the best part of Trading Justice. Thank you for being the best part of Tackle Trading. Thank you for being in our lives. Thank you for making our lives better. We love our community very, very, very dearly. And we just hope that absolutely everybody has a wonderful, wonderful time on Thanksgiving. Enjoy the family, enjoy the food, enjoy the games, enjoy whatever you do. Just have a tremendous amount of fun and be safe if you're traveling out there. With that said, have a wonderful rest of your week, and we'll see you in the AI Gold Rush webinar.
Happy Thanksgiving, everyone.